Welcome back. All morning mover shares of UnitedHealth down more than 10% this week, extending its 2025 decline. Earnings this week showed a 16% jump in revenue, but outlook came in below consensus' 2025 outlook amid rising health costs. UnitedHealth down now 50% on the year and trading at its lowest level since April of 2020. I want to bring in Tom White, senior options contributor. Start out with a look at the chart. Tom, when I looked at that chart, I mean, wow, down 50%. All right, talk to us about what you're paying attention to in terms of the key levels in this chart.
Yeah, the chart kind of says it all here, Diane. Since hitting those all-time highs above $630 per share in November of 2024, we've seen that steep decline, down over 50% this year, 60% from those all-time highs. And you can see this. This is all about earnings, right? Expectations. We saw big drops last quarter and this quarter as we're hitting basically about 5.5-year lows on the stock. Settled just about $250 per share. If you take a look at this 50-day moving average, kind of followed that trend that we're seeing, sitting about $298. So this is a major component within the Dow, right? You've seen that pullback. The Dow is a price-weighted index. So this is kind of weighed on the Dow while the S&P and NASDAQ were hitting all-time highs. The Dow wasn't because of the factor of UNH, which was a high-priced stock, just about 9 months ago. So think about that. If you take a look at the RSI, relative strength indicator here, down at the 27 level. That's extremely low. Anything below the 30 level is considered oversold at this point. But you can see it's been there multiple times, getting down below the 20 level at one point during that last drop. Department of Justice investigating them on their Medicare practices also. So this kind of is reflective of what's been going on in the stock. We got another chart here that's actually a longer term chart. This is that basically a 10-year chart. You can see the steep rise that we saw. You know, everything was going well for UNH as it hit those all-time highs. But over the last 8 to 10 months here, we're seeing that steep decline. Now, oversold on a technical basis probably gives you some opportunities as far as trading goes.
Okay, so then since you said there's probably some opportunities as far as trading goes, how would you approach an example trade for UNH?
Well, I would look at this. It's been a falling knife, and I think a lot of people have been trying to get into this stock over the past 8 to 10 months here with the expectation, hey, they're going to right the ship. They did mention on their last earnings call they expect profitability to return by the end of the year into 2026. That might be a bonus. So I looked at a strategy that takes advantage of duration, gives us some time, right? Maybe get rid of some of that near-term volatility that's in the stock. I mentioned the oversold levels. We're seeing a little bit of a tick up today. Stock's trading just above $250 a share. So I went out to the October monthly cycle. So 77 days till expiration on this one, about 2.5 months in this position where I'm going to buy a call vertical. Implied volatility levels, while elevated over the last 8 months because of the steep drop that we've seen, the IV percentile rank only about 36%. So in that bottom 1/3 of what we've seen over the last 12 months. So if we see some consolidation there as far as the IV levels, that would help maybe turn the stock around. So going out to the October monthly cycle, we're going to buy the at-the-money 250 strike call. It's got that higher delta. It reacts more like the stock. And then against it, we're going to sell the 300 strike call. So maybe you think it's going to go higher, but you've only got 2.5 months. 300 level, right about that 50-day moving average. Maybe that acts as resistance here. $50 wide bullish call vertical. You're paying roughly about a $14 debit. It might be a little bit higher than that, but that's the risk that you have in this trade. $1,400 per spread. Takes your break even up to $264 to the upside. That's only about 5.5% above the current share price. So you don't need a monster move. You just need some rebounding in the stock. Now, by buying a vertical like this, it gives you some flexibility. You've got 77 days till expiration, but because you're buying it, if the stock moves higher maybe in the next week, the next month, it gives you some flexibility as far as trade management. Maybe you can close it early if it starts to expand in price. The probability of touching the 300 level into October expiration, about 32%. But to get to 280, probability of touching there is over 53%. So you've got some probabilities that are working in your favor on this one. But if you think it's going to rebound over the next 2.5 months, this might be the way to play it as opposed to buying the shares because it's still a $250 stock.
All right, thank you, Tom. That's an example trade there for UnitedHealth.